Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 26, 2022. Let's take a look at beaten down technology stocks to buy. As many of you know, market is taking a beating now. It's always good to buy strong companies which are beaten down so that way we can outperform the market. So with that, let's jump in here. Look, we got technology stocks here starting with high market cap, which is Apple. Look, Apple has got about 2.6 trillion dollar market cap, followed by Microsoft and so on and so forth. It's sorted by market cap, high market cap and top. And look, from an RSI perspective, all these stocks are beaten down. The RSI lower than 50. That tells you these stocks are beaten down big time and ready to go higher. Also, we got here sales. Look at the sales growth in 1 year. All these stocks have got positive sales growth in last 1 year, and many of them have got double-digit sales growth, which are my favorites. And look, these companies are making money. We got net margin here. Net margin is comfortably positive here. So that tells you many of these companies are doing well, probably with the exception of Atlassian or Team, which has got negative net margin. And then you got earnings per share, which tells you most of these companies are earning money, except for Atlassian, which is losing at this point. And look, we got here how much the stock is off of 52-week high. Many of these stocks are off of their 52-week high. We got some leaders here with the big time down. Like look here, Nvidia down big time here, 43% down from 53-week high, 52-week high. That tells you some of these are very compelling at these levels. We can take a look at a few of those. And finally, we like to buy companies with nice cash cushion here. Look at the cash on balance sheet here. Nice cash and balance sheet on many of these companies. And also free cash flow positive. These companies are turning in free cash flow. And look, we also have next year earnings growth. Many of these companies, with the exception of one right here, they're all they all have nice earnings growth here. Look, we got Sony here. Looks like it's got a negative next year EPS growth. With the exception of that, all other companies have got positive next year EPS growth. And then you got overall score here. Look, nice and high, probably with the exception of one or two, which is one is Team here, and one is right here, which is let's see here. Which is Oracle, which has got a little bit lower score, but otherwise all the companies, many of these companies have got nice overall score here. And one more exception is ASML, which is a little bit lesser score as of now, but that also works here. All right, so what we'll do is we'll look at a couple of these companies and go from there. Look, top of the list is Apple. Apple is one of my favorite stock. It has come down so much off late. Look, it's down 11% from 52-week high. That puts Apple stock in the correction territory. And look, they got nice $63 billion free cash, cash on the balance sheet, and $101 billion free cash flow. Company is going to announce earnings in 2 days or so. And I think it's a good one to buy at these levels, given RSI is 42. Apple has got a lot of things going on. They got services revenue coming in, and they also want to get into hardware subscription. That could be a game changer. And then you got Microsoft. Microsoft is one of my favorite companies. Satya Nadella at the top. He's really trying to make Microsoft into a cloud powerhouse with Microsoft Azure. Look, it's got right now RSI is 42, just like Apple. Stock is sold off here. It's 20% down from 52-week high. Nice $63 billion in the free cash flow perspective. And look at the cash and balance sheet, $125 billion. These guys can afford to buy a big company. And look, earnings per share growth is even higher than Apple. Nice overall score of 80. So I would be a buyer of Microsoft in this downturn here. And then we got a few more here. We got Taiwan Semi, TSM. Look, it's got pretty okay overall score, and RSI is 37. Tells you, all these chip sector stocks are out of favor at this time. You could look at this one also. One of my favorite is Nvidia. Nvidia is very intriguing at these levels here. Stock came down big time. Look, it's down 43% from 52-week high. I'm slowly buying Nvidia on down days and accumulating. Nvidia has shown time and again it can bounce back, once the market stabilizes. So that's why it's a good one to slowly buy and accumulate. And then you got a few more here, and AVGO or Broadcom is also one of my favorite here. Broadcom, look, it's done pretty good overall in the long term. Stock is sold off in the near term. You could look at that one also. And if you want to sleep at night type stock, we got Cisco here, pretty steady Eddie with a good dividend payment here. This also works here. Stock is sold off with the lower RSI. And we got Oracle. Oracle is a Larry Ellison's company, and this company is not afraid to make some bold statements once in a while. Stock is sold off with a low RSI. You could buy this one also. Larry is not afraid to make some acquisitions as and when needed, like they've done Cerner acquisition a while ago. And we got a few more here. We got Adobe, one of my favorite. Adobe is down big time. Look, Adobe is down 41%, a great company. And also we did not talk about Accenture. Accenture is also great one here, ACN. You could look at Accenture also. Nice overall score in Accenture, which is 88. You could look at Accenture also. And if you need a leader which is a turnaround story, you could look at Intel here, down big time and trying to recover. As you can see here, Intel with the leader Pat Gelsinger, this company can turn around. Look, it's trying to go higher in shorter term here, 1 day, 5 day, 10 day. This is a beaten down stock. You could buy this one for a turnaround. And then you got CRM Salesforce.com, Mark Benioff's company. This is also beaten down big time here. Look, it's RSI is 32, completely beaten down here. A little bit high valuation from a PE ratio perspective, but price to sales perspective, it's okay. And we got a few more here. We got Texas Instruments. It's also a sleep at home type stock here. You don't need to worry. It's a steady Eddie type name here. They will do very well. Look, 5 years they've done well. All these chip stocks have gone out of favor here. And look, we got two more here. Qualcomm and AMD, both are down big time. You could buy this for a turnaround type candidate here. And AMD has got Lisa Su as the leader. She can turn this company around. Look, stock has been taking a beating off late here, and earnings is around the corner, 5.3. This also can turn around along with Qualcomm. And then we got a few more here, all great names here. Keep watching the cash on the balance sheet. These guys are really have a lot of cash on the balance sheet. They can do very well. And Sony is a good play here. It's into gaming and a couple other areas. Stock is beaten down with the Microsoft acquisition of Activision Blizzard, and you could buy this one also here. And we got if you want low price stock, we got Infosys here, which is a low price stock which can do very well, long term nice performance. Stock has taken a beating in the short term after announcing the earnings. And we got a few more here. I love Lam Research here, completely sold off. As you can see here, down 35% from 52-week high. That must be hurting. Stock is trying to turn around slowly, as you can see here. All right, so and we got here SAP. Many of you know SAP here, German software company, down big time. You could buy this great software company along with Intuit, which is one of my favorite. All right, list continues here. We'll not talk about all of them, but keep watch on how much the stock is off from 52-week high. There are a few names which are very intriguing. Look, we got Uber and Square. Let's bring this a little bit to the side here. We got Uber and Square, both are down big time here. Look, we got Uber and Square right here. Uber down 42%, Square down 56%. I would go with the higher score, which is Square here, or Block as we call it. Stock is down big time, and Jack Dorsey can turn this company around. And we got a few more here. Keep watching the stocks which are down big time. We got Snowflake and Shopify. Both are high flying names here. You got to be a little bit careful here. Look, Snowflake is trying to turn around here slowly, whereas Shopify is still down. If you have a long-term horizon, I love Snowflake. It's a great company. Shopify also can do well, but right now Wall Street does not like Shopify. That's why it's been down, down, down. Look, it feels like a catching a falling knife here. So I would rather buy maybe Snowflake slowly and wait for Shopify to settle down some more. And we got few more here. Keep watching how much the stock is down. We got one more here, Autodesk. Out of favor stock, as you can see here, down big time. You could slowly buy some Autodesk also here and go from there. And we got Marvell and Fortinet, both are my favorites here. You could buy these names also. And look, Fortinet is a great one here, nice overall score of 83. You could buy that one also. And we got TE Connectivity. This stock is not covered much in the media, has been steadily doing very well. You could look at this stock also, low RSI. You could buy TE Connectivity here. And we got a few more, as you see here. We got one of my favorite here, Arista Network. It's also doing pretty well. Stock is sold off here. You could buy this company also. They're competing effectively with stocks companies like Cisco here. You could buy this great company here. All right, so let's look at one more list here and go from there. Look, the list continues here. Look at the market cap here. It's in the descending order. Top is the nice high market cap here. One of my favorite is Cloudflare or Net. It's one of those cyber security slash it also does content delivery type things. Look, it's a great company here. Stock is sold off big time. Look, it's down 55% from 52-week high. That's a huge drop. And company doing very well from a sales growth perspective. Gross margin is good. Company is losing money. Now look, EPS is negative. Net margin is negative. That's why it's not getting love from Wall Street. I would be slowly buying this company here and go from there. And then you got Ttd Trade Desk. Again, same story, out of favor stock here. This company is making money. Nice overall score here. I think it's a great one to buy here. They're into digital advertising, and this company can also bounce back here. Look, it's a high multiple company here along with the Cloudflare. That's why it's not getting love from Wall Street. And we got a few more here. Keep watching how much stock is off of 52-week high. There are a couple of them which are big time down here. I love Unity software. It's a operating system for gaming, and it's also trying to do metaverse related aspects here. It's a great one to buy here, down big time, as you can see here. And Palantir stock at these levels is intriguing. You could take a look at Palantir also here. It's been clobbered off late, but it could be long-term buy here. And we got a few more, as you see here. Keep watching the the companies which are down big time here. We got two here. We got Skyworks and Bill.com. Bill.com, look, it's very low here. Mainly price to sales ratio is high. That's why it's struggling now. And Skyworks is a great one to buy at these levels here. You could take advantage. It's a better overall score, as you can see here. And then got UMC, which is a very low price stock, as you see here, $7.90 stock. Look, overall score is nice and high. You could buy this one also. And we got a few more, as you can see here. We got Docusign. Docusign got clobbered. It's really around signing your documents. Stock is getting clobbered here. Very low RSI 41. This can be a turnaround candidate. Company is still losing money, but not too much. Could be a good turnaround candidate. And we got a few more, as you see here. All these semiconductor names are big time down. I'll be slowly selectively buying some of those and go from there. All right, so with that, let's look at one or two more stocks in a little more detail. Look, first off, we got Nvidia, which is one of my favorite. Look what's going on here. Stock has gone nicely back in 2021. Look, nice uptick here, up. People thought Nvidia is invincible. It's going to do well. But look what's going on off late. Nice trading range here. It's in a nice volatility box. And now it's trying to go slightly higher, as you can see here. At these levels, it's down big time. I'm slowly buying this company on down days. Earnings is around the corner. Jetson Wong, he can really do very well, and company can go higher. typically, when the stock is down, they tend to do well toward the earning. Look, stock is down slightly. Stock went higher after the earnings. I can expect the same thing here. After the earnings, stock can go higher. Right now, as you see here, high IV percentile. IV percentile is 85. You could get some good money selling some put spreads or put options way under the stock price here. And look, right now, sentiment is down on the semiconductor stocks. That's why check-in money flow indicates down. And slowly, volume on the balance volume is slowly trying to go higher. That could be a good one. From a DMI perspective, it's a negative with the red line on top, blue line on the bottom, and the distance is significant. That tells you right now it's a bearish sentiment here. That's why I like to buy this great company very slowly and slowly accumulate nice position. This can give very good bounce back. All right, next up, let's look at Nvidia into a little more details. $548 market cap here. It's a big cap company, and analysts are recommending buy for this company. And technical rating perspective, it's a sell. There is a divergence between what analysts say and what technical says. And look, from a Morningstar perspective, it gets a nice grade B in financials, grade B in growth, and grade B in profitability. So it's a good company to buy. And look at the performance here. The near-term performance is negative. Look, 5 day all the way to year to date, it's negative. But look, 1 year, 2 year, 5 year, long term, it's doing very well. Long term story is intact. And from a next year perspective, earnings growth for next year is positive, and also sales growth for next year is also positive. Next year sales growth nice and high, so it's a good one to buy here. Nice net margin, as you can see here. That's good. And as well as you can see here, let's see here, financial perspective. These companies, this one does not have too much debt, so debt to equity ratio is, let's see, on top here. From a debt to equity ratio perspective, I think they don't have too much debt. I'm trying to scan through here. I think it's pretty okay from a debt perspective. Look, debt to equity ratio is 0.40, not too much debt. Current ratio is also nice and high, so I'm not worried about this stock at all. And from a moving average perspective, stock is down below most of these moving averages. Look, it's down below almost all of these moving averages here. So it's a turnaround story here. All right, so let's look at a few more here. Next is Adobe. Adobe is also one of my favorite companies. Creative Cloud. It's really helping all the artists to express themselves and everybody to express themselves. Look, stock has been dropping off big time, as you can see here. Now it's trying to consolidate. Earnings is coming next. The date is wrong here, but earnings is around the corner, so that's why it's a good one to buy at these levels here. Right now, look, IV percentile is going higher, 69. That tells you can make some good money selling some put spreads and way under the stock price. And this one also similar pattern here, negative with the DMI red line on top, blue line on the bottom. That tells you it's a negative, bearish at this time. And volatility is jumping higher. It's higher than historical volatility. And we got here check-in money flow going down, indicating right now sentiment is bearish. It's trying to settle down, as you can see here, a little bit flattish. On the balance volume is slowly ticking up. That tells you folks are buying this company here. All right, so Adobe from a snapshot perspective, look, they don't have too much debt. Debt to equity ratio is 0.30. Strong buy from analyst perspective and a sell from technical rating. It's again a divergence here. That's why I like this divergence type candidate. Stock is sold off with the low RSI. Earnings is coming 6/16, just around the corner, month or so later. And stock has been clobbered in short term here. Look at the 5 day, 10 day, all the way to year to date. 1 year it's down, but long term story is intact. Company doing very well. And look, from a margin perspective, nice and healthy net margin here, 30%. And look, they are doing pretty well here. Cost of debt is very low here, 2.40%. Interest rate on $4 billion debt, not too bad at all. And stock is below its moving average, as you can see here. Right now it's a bearish. And as you scan through from a Morningstar perspective, it gets a nice grade here. Financials A grade, and growth and profitability B grade. Overall score is 87. I think it's a great one to buy slowly and accumulate at these levels. So with that, thank you very much. Happy investing and trading. Please subscribe.